accounting equation and Excel, rental income estimate and invoice. Get ready and some coffee because we're about to learn the accounting foundation, the accounting equation with Excel. First, a word from our sponsor. Yeah, actually, we're sponsoring ourselves on this one because apparently the merchandisers, they don't want to be seen with us. But that's okay, whatever. Because our merchandise is better than their stupid stuff anyways. Like our Trust Me, I'm an Accountant product line. Yeah, it's paramount that you let people know that you're an accountant. Because apparently we're among the only ones equipped with the number crunching skills to answer society's current deep, complex, and nuanced questions. If you would like a commercial-free experience, consider subscribing to our website at accountinginstruction.com or accountinginstruction.thinkific.com. Here we are in Excel. If you don't have access to this workbook, that's okay because we basically built this from a blank worksheet but started in a prior presentation. So if you want to build this entire worksheet from a blank sheet, you may want to begin back there or just build your own worksheet as we go, or possibly just follow along with good old paper and pencil. If you do have access to this workbook though, 4 tabs down below: example, month 1, practice, month 2, example, in essence, answer key. Month 1, prior month of operations, practice tab having pre-formatted cells so you can practice the practice problem with less Excel formatting. Month 2 tab, the one we will be working in, current month of operations, where we started with a blank worksheet but are basically working within a template at this time. However, we will be adding to that template as needed as we go, practicing our Excel tools and formatting as we do so. Let's go to the example tab to get an idea of what we will be doing. Remembering we're basically building our bookkeeping system using the accounting equation as, in essence, our trial balance, constructing our financial statements then from that accounting equation trial balance. The financial statements being balance sheet, income statement, statement of equity, income statement, sometimes called the profit and loss report. Now, in our scenario, we've been selling guitars, which is an inventory type of system, but we want to look at some ideas of other types of industries and other types of revenue streams that a business might have, keeping special attention on those things that make them a little bit different. For example, the types of industries that have to have an accrual component to them, and for example, those types of industries that might collect the cash before they actually do the work. So we had inventory revenue. We imagined that we had a system similar to a law firm or a bookkeeping or CPA firm where you have partners and then you have staff and you have to bill out the time. That was mirrored in an idea of we have guitar instructors that need to give us the time that we can then bill out to the clients. Now we're looking at a scenario where we have rental property. So if we have rental property, we might have a situation with a down payment type of situation. Now in real estate situation, if you rent real estate property, then of course, if it's residential, the custom would be possibly first month rent or the last month rent to pay as, or a deposit that they're going to basically hold on to, which you're probably never going to get back, right? They just keep the deposit. They just say, well, we need to fix something, and then they keep it. But in theory, you didn't actually earn the revenue with those, so you have to record them as a liability because we got paid before we did the work. In our case, we're going to be renting out equipment, band equipment. So we have our stock set of equipment that we're going to be renting out. And so how would that process work? Well, first we talked about the fact that if it was in a QuickBooks system or even not, we'd have to set up the parameters for the rental equipment. In other words, we might not want to rent out like one drumstick or something like that. That's not going to be worth our time. We might have a minimum set of rentals, which might be a whole band set, like 2 guitars, a drum set, an amplifier, and some microphones, for example. That's the minimum that we rent, and then maybe we add to that. So in order to set that up, we might set up items that would say this is the base package and these are the adjustments that you can make to them and the costs related to that. If we set that up in like a QuickBooks type of system, those would be our revenue type of items. If someone calls in and they want the equipment, then what we're going to say is, hey, we're really popular equipment over here. A lot of people want the equipment, but we'll give you a deal. We'll hold on to that equipment just for you because we like you. But we need to have a down payment. So we want to have a down payment just to make sure that you're totally committed to the equipment, right? And so then to give the down payment, it's going to be, well, how much should I give? Well, we can make an estimate form, which looks like an invoice form, but doesn't actually record anything and therefore was not recorded in our accounting equation here. But we could have made like a subledger with the estimate saying whether or not the estimate is open or closed, right? And then when the individual, and then based on that estimate, we could then collect like 10% of the estimate or whatever we think the proper down payment would be on it, right? And that in a QuickBooks term would typically be a payment form. Now, a payment form, receive payment, is usually connected to an invoice. You might say, hey, it should be like a deposit form or maybe a sales receipt form, like the form you would have at a cash register. But in this case, they paid us before we did the work. So we could use like a form to try to record it in unearned revenue. But then, as we talked about in the past, we have a problem with unearned revenue and the subsidiary ledger, which is usually tied to accounts receivable. Therefore, from a bookkeeping standpoint, it's usually easier to make a negative receivable for the deposit. Again, if that bothers you and you don't know what I'm talking about there, we have another presentation on unearned revenue where I go into that in more detail. So that then we would collect the deposit here and have a negative amount, and that's going to be this 200 that was recorded. That's where we stand now. If I go into the subledger, here's the 200 for customer number 5. Notice that the accounts receivable is still positive in total, but by customer, I have this negative balance for this particular customer, which means that should not actually be a negative receivable, but rather a positive liability. But again, from a bookkeeping standpoint, it makes sense to have a negative receivable because now I can see clearly that was an advanced payment, a credit to the customer account, if you want to call it that terminology, that we can then tie out or match to the invoice that we are going to create. That's what we're going to do now in our story. We're imagining customer number 5 comes in and we actually complete the transaction of the rental property. Remembering that you might also think that you would want to hold on to some kind of deposit over and above the cost of the equipment or something like that, like hold on to their driver's license or something so that they make sure they return the rental property. But I'm not going to get into that right now. We're just going to say they come in, they finish the transaction, and we're going to then make the invoice netting out that prepayment made to it. All right, let's go to the month 2 tab. So recording that transaction. So now so here's the 200 that we have. It's in customer 5. Now customer 5, we imagine they come into the store. Now it could be someone totally different than who was on the phone talking to customer 5. That's what a QuickBooks system or some kind of good accounting system will help us to do, so that we can have some stupid kid, at the registers like, Dad, who's customer 5? You have a, okay, not all kids are stupid, but they're kind of distracted, not like stupid. They're like distracted, and they're like, okay. And then the customer 5 is like, dude, I've got rental equipment and then we can look in our system and look up customer number 5 and say, oh, I can see like an estimate form that hasn't been closed here. And then I can see like that you already paid like $200 because you have a credit balance in your account. See, that's what we would see over in customer 5's subledger. So we could do that quite easily with a good, accounting system. We'd say, okay, dude, so now we'll just give you the invoice. So do you want is this estimate form correct? Is this what you want? And they're like, yeah, that's the estimate form that we made. The estimate form looking like the invoice. So now the kid's like, okay, dude, I can make the invoice from the estimate form. Let me do that. So now we're going to say that on 7/27, let's just do the same date. We're going to say that we're going to have an invoice for the rental equipment. So this is for customer 5 again. Let's indent that, home tab, alignment, indent. And let's just say that the invoice, once we then populate the invoice from the estimate, the band equipment plus whatever adjustments they wanted on the estimate comes out to 2260. That's what the invoice is. Now that amount has not been reduced by the 200 that was already paid. But that's okay because I'm going to record it as is, and in the customer's subledger over here, we already have the negative 200. I don't need to record the negative 200 again. It's correct in our financial statements. What I do need to do is adjust my invoice and make sure that I connect the invoice to that 200 so that I can tell them the proper amount that they owe us at the bottom of the invoice. And that's why this system works pretty nice, although we have to be careful that we properly apply the credit to the invoice, the credit not recording anything new from the recording of the invoice, but is a reporting thing at the bottom of the invoice to show what is actually still owed after applying the credit. It also is nice in software where we can actually connect the forms. I can connect the invoice to the payment that we received in advance. Okay, so let's do that. We're going to say, all right, so we'll just do a normal transaction here. So we don't have to deal with inventory because in theory, we're going to get it back, hopefully. Customer 5, we trust the customer family. They're not going to steal our stuff. So we're going to say then that, let's see. So we're going to say invoice. This is going to go up accounts receivable 2260. I'm going to imagine we don't have sales tax on this because it's not inventory that we're selling. Therefore, many times, depending on where you are, you might not have sales tax unless you're selling actual inventory. And then notice we could put over here into another item, like I might want another income account called equipment rental. Now, remember the idea on the accounts over here, I don't want an account like for every customer. You might be tempted to do that. That's not usually a good idea unless you have gig work or something like that and you just get paid by platform like a YouTube or something like that. You might be tempted, then it might make sense to just put it in by customer, who paid you. But otherwise, you're going to have too much stuff on your income statement. You don't want to put it in there by item, meaning the thing that you sold. I don't want to have an income account for every guitar I sold. But I might want to have the major categories. I might break out like equipment that I sell versus the service items that I have, the guitar lessons, and I might further break out the service item here of guitar lessons versus the rental equipment as a whole group of things. So within the category of rental equipment, for example, I wouldn't want to say I have rental equipment for guitars, amplifiers, and so on. I might be able to add that detail in the subledgers, which I can't really do so much in my two-dimensional worksheet here, but can be done quite easily in a database program, which is another reason we don't need all that detail on the income statement. It'll just clutter up the income statement. But I think equipment rental is a big enough category that I'd like to have another income account just specific for it. So I'm going to select column AE, the whole column. I'm going to insert. It'll go into to the left of it. Right click and insert. Now notice what it does. It pulls over the formatting from the cells to the right or to the left. It also gives me this little drop down thing up top. And this helps me to say, I want you to format it not from the cells to the left, but format from the cells to the right. You might ask, why does it format by default from the cells to the left? And I don't know. I won't get into that. That's what it is. That's what it does by default. So I'm going to copy this one and I'll put this over here and then I'll delete this. So now I have the income statement starting over here. And then I'm going to call this well, hold on, that's not an E. My fingers are too fat or something. Equipment rental income, INC. I'll just say it looks like ink. It's not ink, it's income. Just so you know. All right. Equipment rental income. All right. So then I'm going to go down here and say, what line am I on? I'm on this line. So we're going to say this equals revenue of that. Let's put zeros across the board and add it to our subledger. Zeros across the board. Zeros across the board. Zeros across the board. And then we'll add it to our subledger, customer number 5, numero 5. We're going to say this equals the same thing that we did to the accounts receivable, which would be done automatically using accounting software, because the invoice would force you, using most software, to have a customer, and therefore it'll do the subledger for you. I'm going to just drag down the total. So there's our running balance. Boom. So total accounts receivable now at 24,236, and this negative balance, which was wrong before because it should have been a liability, now is fine. It's correct because now it's a positive balance once we connect out that 200 to the amount of the invoice, 2,060. Remembering that this, if we imagine that as a payment form and like a QuickBooks software, then the payment form would be connected then to the invoice. So the invoice would say, partially paid, and it'll have a connection that you can go to the payment form and link them together. Now, once I make this invoice, however, in like a software, usually you'd have to go up and apply the credit. So there might be something up in the ribbon saying apply a credit, or when you record it, the software might ask you and say, hey, look, there's a credit applied to it. So you might then just record it and then apply the credit. Or if it doesn't do those, you don't have the defaults on for it to do that, then you go into the payment form and apply it to the invoice, go back into the invoice, which will then have recorded the same thing. But again, the bottom of the invoice should show that the credit has been applied. We'll try to make that automatic so that the dude at the register doesn't have to do anything too crazy. He's not all there. He's not stupid. Okay, I didn't mean to call him stupid before, but he's kind of like this. The kid's a little distracted. He's got. They probably would have put him on ADHD medicine or something, but I don't think it's really. I think he's just a normal kid that's always distracted. I don't put him on the medicine. I just try to make my accounting system good so it doesn't confuse him even when he's going crazy. So let's copy this down, and then let's double check that the equity, that's correct. Okay, equity's pulling in, so that looks good. All right, so that is going to be that one. Let's pull in the balance then, ending balance, and this is going to be equal to the sum, prior balance plus current activity. I'm going to copy that, Control C. I'm going to hold down Shift, and then I'm going to hold down the arrow. I'm going to try to stop right at the end again. Oh, that's not bad. It's not my best work, but it wasn't bad. I'm going to right click and paste just the formulas only. All right. So that is that. Okay. So now the kid's like, here's the invoice, dude. And so like you can see the credit's been applied at the bottom, and you still owe us the net of those two. I see at the bottom of the invoice, 2,060, man. And they're like, and the guy's like, okay, I'll pay you that. So now let's say we receive a payment on 2/27. We're going to receive the rest of the payment for rental stuff, let's say. And this is going to be, once again, customer number 5. So how much is still owed? It's going to be the 2060. And maybe I should connect that just so you can see where does that come from, equals the sum of the invoice minus the credit that was applied to it. 2060 is still owed. It's like, okay, dude, give us the payment. So we're going to put that into undeposited funds, because it could be cash or maybe credit card, which our normal policy, again, is going to be, just to make it easy, because I do have some payments that are cash, and I do have some payments that go through the credit card or Stripe, which need to then be combined before they go into the checking account. Therefore, I'm going to have a general policy so as not to confuse anybody, so that it always goes into undeposited funds. That's just going to be the normal process when we receive a payment, and then we'll group it properly when we put it into the checking account. All right, so then the other side is going to go to accounts receivable, is going down. So let's put zeros across the board, and then we'll put that on the subledger. Zeros across the board, and zeros across the board. And then we'll go to the subledger, and customer number 5 has now paid us. So I'm going to say equals to what happened in the accounts receivable account. Negative 2060 should bring the balance down. So ending balance should be 22,167 total. The customer 5 is now owing us 0. So their balance is down to 0. It's like, okay, that's what should happen, dude. I was a little worried at the cash register, but I feel like that's correct now because your balance is down to 0, man. So then we're at 22,176. 22,176 is this minus this. And so that's the total. So our subledger adds up to our general ledger. Let's put an underline here and bring down the totals. Put in an underline. I'm going to copy down this one, copy that down, and then I'm going to copy this down for formatting's sake. All right, and then we'll bring down the balance. Let's bring down the balance thus far. We're going to bring it down. Let's bring it down to here. Okay, now let's put the balances over here. Equals the sum, prior balance plus current activity. Copy that, Control C, holding down Shift, right arrow, boom. Oh, short. I got, well, that's not too bad. I got a little excited. Right click, we're going to make it pasting formulas only. All right. And then scrolling back over. So now we're still in balance again. All right, finally, let's just make that deposit. We're going to imagine that's all that happened. So we've got this amount of cash, let's say, in the cash register, and we're now going to go to the bank and make the deposit. So this, so we get our bouncer, we get pumped up, have some caffeine, so we're ready to brave the streets with all that cash on us, which is we're like a target. So, but that's okay because we're gonna make it. We're gonna make it to the bank. So now we're gonna say we're gonna put that in the bank. It's gonna be undeposited funds gonna go down 2,060, and then the checking account's gonna go up. All right. So we made it to the bank. We put that in the bank for that amount. It's a pretty mellow trip this time. They saw that we were defending ourselves with those pool noodles, and they got scared. They thought they could take us out with the pool noodles, but we're deft in handling the pool noodles these days. Take them out without hurting them, so they can't even sue us. It's crazy. We've got skills, got mad skills to fend off the thieves. Let's copy this down, and then we'll copy this down, and then we'll bring down the balance. Bringing down the balance. Well, let's put the balance down here. Balance. Bring down the balance equals the sum of the prior balance, current activity. Control C, copy, holding down Shift, all the way to the right. Doom. Oh, dang close. That's about as close as I've gotten so far. Right click, paste it, formulas only. And then let's pull down our balances over here, and we'll call it a day. We're gonna pull this down. Boom, it's a day. So what does that mean? I work all night. So who cares if you call it a day? It's always a day. I'm calling it a day. What else would it be? Night? Call it a day all you want. What does that have to do with anything? I'm just calling it a day, okay? So I think that's basically it. That's the general idea of that one.